Yeah,
Wanna do it?
crafts stuff maybe.
I'm definitely not crafty, so I can stay in here.
Nor am I.
All right, am I showing too much leg? Looks like I should have had my long skirt on today.
Good morning, everybody. Welcome to Don Zavis Sales Consulting. If it's Friday at 11:30 and Mountain Time in the Old Pueblo, guess where? You're going to find us right here. Welcome all of our YouTube streamers, our Facebook streamers, and our other streamers. There's so many streaming, I can't keep up with them anymore. I'm John Wechter, and flying solo today with Don Zavis being off on a different project. And so we're just going to go ahead and get started on a new type of format for us, just because I'm flying solo and I'm going to do this because I can. And so one of the things that we're going to do today is we're going to invite a guest to come in, and she's right here, Cindy Wilson. And what we're going to do is we're going to kind of engage with her in a speaking of sales type of conversation, because she's in the reverse mortgage business, and like all of us, depending on our industries, we all have to sell at some point in time, and she's got a lot of experience in that particular genre. So we're going to go ahead and get going. Then we're going to do a little bit of a workshop on network partnering, and once that network partnering workshop is kind of done, then we're going to talk about the six levels of engagement that you need to do to make sure that you keep your network partners fully engaged with your vision, mission, and values. So Cindy, welcome.
Thank you. It's nice to be here today.
Why don't you give our listeners a little bit of your background and how you got started in the mortgage business and how long you've been in it and where you're licensed and all that kind of stuff.
All right, so I'm Cindy Wilson. I'm with People's Mortgage Company. My office is based out of Tucson. I'm actually licensed in 8 different states: Arizona, California, Colorado, New Mexico, Georgia, Kansas, Nevada, Virginia. I think that's 8.
I wasn't counting them.
Anyways, I started in the mortgage business back in the early 90s through banking at one of the top banks in Arkansas. And through that, I then moved back to California, got my real estate license because I'm a 3rd-generation realtor, so it was the thing to do. Fell back into mortgages because my friend who was running a real estate and mortgage company said, this is what you do. You did it in Arkansas, why not do it here in California and sell real estate? So I did the same, and I represented both my real estate clients and my mortgage customers, which put me in a unique position because I had experience on both sides, so I was a better negotiator for them on the real estate deal. And then I taught realtors a few things they needed to know about the mortgage end at the same time. So from there, I moved on out to San Diego and helped run a mortgage and real estate company out there for a little bit, and then moved out here to Tucson. So from here, just all developed. I've been in the mortgage business 27 years or so. Reverse mortgage, I fell into about 15 years ago, mostly because I just love that market group. They have super interesting stories. They're wonderful people. Everyone that's looking to right-size their homes, looking to retire, looking to take their home and make it more of a financial tool as opposed to just sitting on equity that it's not going anywhere and they're not doing anything with. So the reverse mortgage product really fell well into that category for me, and I just love seniors. So they all become my friends, and they all call me, and we go to lunch, monthly with different seniors, just because there's okay, it's time to meet up, so we do. So that's why I love the reverse mortgage.
We seniors can be lonely individuals sometimes.
Well, I guess I shouldn't pocket it seniors because you just need to be 62 years or older. So I guess I'm almost there at 62, so I shouldn't label myself a senior. But what's
the biggest difficulty about the selling process when it comes to reverse mortgages?
I think it's the old stigma and the myths of I no longer own my house, they're going to take my house away from me. Back in the early 80s, it was run not by FHA, so there was a lot of hurt and harm going on. And then when the Reagan administration came in, they then revamped it. FHA took over, and through the years, it's just developed into a wonderful program. It's probably the most highest secured mortgage in the marketplace today. Mostly because of the processes we have to go through before we even get to application, which we can go over now or a later time.
Yeah, please.
So,
what is the process?
So the process is we'll meet and I'll educate. I feel it's very important to educate before we even start with the process of application, because I really want you to understand what the reverse mortgage is all about. And there's two different reverse mortgages. There's the FHA, and then there's also the conventional jumbo. So it just depends. Some people fit into both categories and they have a choice. Some just fit into the FHA. So what we'll do is we'll educate. I'll create a proposal. We'll go through the proposal, and you'll have different selections. And then after that, you'll speak to a HUD counselor. You're going to call and make an appointment with a HUD counselor. They're going to pretty much re-educate what I've already told you, go through the financial steps that I went with you. They're going to make sure you understand the program and answer all your questions. When that counselor feels like you're ready to move forward and you're making a good choice, they'll give me what's called a HECM certificate, or the conventional has a different certificate. And then that will allow me to process forward into an application. And then during that process, there's just a few verification documents I will need from you. It's a little gentler qualifying than the traditional marketplace. We're just looking for a financial assessment, kind of mirrors a little bit close to the VA loans and their financial assessment, just to make sure at the end of the day you still have money in your account after you pay all your property charges and minimum credit card debts and things such as that. Yeah, and then we just move forward with the application, the appraisal. When the appraisal comes in, we'll readjust your loan amount and see if you need to adjust up, adjust down, or not at all. So it's a work in progress. And the great thing with the reverse mortgage is it's not, you have to have it done right away. And I'm not going to pressure you to get it done right away. It's a pace to your feelings of this is how I want it to go and this is when I'm ready, and we just progress. We're on the traditional side, because I do traditional mortgages as well. Everybody really just wants to close them as fast as they can. So it's just a different mindset, and it's a slower pace. And I'm happy to work with you, your spouse, your family, educate your financial advisors. Very important to include within your decisions, because if you are someone who says, well, I don't need a reverse because, I'm financially sound, I don't even have a mortgage on my house. Well, you need to get with your financial advisor, or we all get together, because you can use the equity within your house as another, I call it another toolbox another box in your box of tools with growing your portfolio. Maybe you don't want to live off drawing from your portfolio right now, because in this environment, the stock market is so volatile. Do you really want to keep drawing from that? Maybe you want to draw from the equity of your house because the housing market's more stable. It's doing really well right now, but it's more stable, and you leave your financial advisor with your portfolios, managing that and keeping it stable in this volatile market, and not reducing it and pulling from it. Or maybe you're retiring, or you want to retire a little bit early, but you don't want to start drawing your Social Security. So you're like, well, I'd rather maximize out my Social Security, but I want to retire. I've got all this equity in this house, or maybe I don't have a lot of equity in this house, but I got this mortgage to pay off. That will put $1,600, plus or minus dollars per month back in my pocket that I can live off of, and then wait till I can maximize to pull out my Social Security whenever that year might be for you. So there's so much you can do with a reverse mortgage. And I think one of the key is with the reverse mortgage line of credit, should you have a line of credit available to draw on, you're going to earn money on that. And we call it a growth rate because it's equity that you're building. It's not income in your pocket that you're drawing, right? So it's not taxable to Social Security and Medicare. There may be some other programs that low income are on that they'll want to check into, but the basics of Social Security and Medicare it's not going to affect, and you're not going to pay taxes when you draw from that line of credit because it's a loan you're drawing from, just like the traditional HELOC. You know, and there is a big difference from that too. Should I jump into that?
Absolutely. That was going to be my next question because
Okay.
I have a traditional. I've always had a traditional mortgage, you know, and I've also gone in on occasion and drawn out some equity in a refinance process,
Right.
and you know, to home improvements or whatever. So what is the difference between pulling money out of a traditional mortgage or refinancing in a traditional way versus, you know, you used HECM and HELOC. So
Okay.
what are the
What are the differences?
Yeah.
Okay, so your HELOC, home equity home equity line of credit that you're going to get from your banks and your credit unions, and it's going to be a line of credit that you can draw on. Now, it has an interest rate that is also variable, but you're also going to have to make a mortgage payment every month. Now, I understand that the line of credits on the traditional side will max out at 24%. So you might have 2%, but it could maximize out to 24%. So who wants to do that? Plus, you can only draw on it for 10 years. After 10 years, it's going to recast into a 20-year note. So you're going to make payments you no longer can draw unless you renew it, refinance it. So with the HECM, which is home equity conversion mortgage, reverse mortgage, with the FHA and the conventional, you'll have a line of credit. You'll be able to draw on it for the FHA, HECM, you can draw on it for life. It's going to have a 5% or a 10% cap on your interest rate on your margin. So I usually put everybody in the 5%. Why put them in the 10%? I would do what I would do for me or want done for me. So let's say right now, probably an average margin plus the index today is about 4.3, so it's even lower than the traditional mortgages and HELOCs right now. And maybe, and then I put you in a cap, so you're not going to be, your interest rate will never grow above, let's just call it 9% to be easy, right? Where on the traditional HELOC, you could go up to 24%.
Gotcha.
Right? Now, you can draw on it for life, it doesn't recast, and you're not required to make a payment. Here's another big myth. People think you can't make a payment with a reverse mortgage. Well, you can. So if you want to get a line of credit to remodel or do whatever, travel, but you don't want to see your line of credit increase because you're not making the payments, your four walls of the house is making those payments, you can make payments just like a traditional mortgage. You know, the difference is you've got that cap, it's not a requirement, so if you have a life event that comes up and you can't make that payment, you're okay. You know, so.
Can you inside your own financial strategy mentally convert your payments into an interest-only loan so you only pay interest and so your equity in your home stays constant?
So every month you're going to get a mortgage statement just like the traditional mortgage statements. So, and on that mortgage statement, it's going to show how much interest was charged that month. With the FHA, since it's insured, it's also going to show the mortgage insurance. If you have the jumbo conventional, obviously it's not insured, so you don't have that monthly mortgage insurance. So so you can see if you want to keep your principal balance where it's at, each month you're going to see how much interest accrued, make that payment, and then you're still at your principal balance that you started with. Just keep in mind, let's say you didn't make a payment for 6 months and now you want to start making payments. Your payments are going to go to that interest and the mortgage insurance and then to your principal. So you can catch it up and still keep your principal balance where you would like it to be.
Interesting,
Yeah.
interesting. So talk a little bit about end-of-life issues and when there's a death in the family and so one of the spouses is kind of left, you know, by him or herself, and what kind of pressures are on them now under a reverse mortgage?
Okay, so comparably, the traditional side, if your spouse passes away, the other spouse is still going to have to make a mortgage payment. Now they've lost probably half the income because the spouse is no longer there. Are they going to be able to make that payment? If they're not, the traditional lenders are going to begin to foreclose after a certain amount of months, correct? Okay, and then they're a little stuffed. They may lose that home or have to sell that home. With the reverse mortgage, you have up to a year, the surviving spouse, to figure out what they want to do. Keep the house, stay and remain in the house until they've passed away, or sell the house. So if we're talking about spouse to spouse, your spouse now, you feel safe because even though that spouse has lost half the income, they don't have a mortgage payment to make. All they're making is their property charges, your property taxes, homeowners insurance, HOA, anything that belongs to the property, you have to make your property charges, right? So they're probably going to be able to do that on half the spousal income when it's gone. Plus, each county has different special exemptions for widows and seniors. You just have to look into your own county where you're at and see what they offer. So your spouse will be able to remain in that house until they pass away as well. They won't have to sell. So that's a big comfort zone to spouses who know when they pass away, the surviving spouse is going to have a minimal income to live off of. Plus, if they have that line of credit and it's still growing, they're still going to be able to draw on that line of credit because they are a borrower and they are in the loan. Yeah, so it's a much safer product. And all you need to do is keep in touch with the servicer, let them know your spouse has passed away. Now, when both spouses are gone, you want me to talk about that?
Yeah.
Okay, so when both spouses have passed away, the heirs have a decision to make. Just like a traditional mortgage, they have a decision to make. On a traditional mortgage, they're going to have to keep making those mortgage payments on the parent's home. They're going to have to maintain it. And maybe they have their own mortgage and their own debts, and maybe paying on this house until they figure out what they want to do with that house is going to be a hardship. And if they can't make those mortgage payments, they're going to start getting foreclosed on, which means, they could lose a lot, right? Okay, so with the reverse, if you stay in contact with the servicer and you let them know what's going on, you can have up to a year to figure out what you want to do with that house as long as you're remaining in contact and doing something proactive to get yourself a decision. Are we going to sell this house just like a traditional, pay off the note, keep the proceeds? Are we going to refinance it into our names? What are we going to do with the house? So the heirs have more time to grieve, sell the estates, and figure out what they want to do. I can give an example of one I just completed. Okay, so I had one that I just completed. His mom passed away. He also is above 62. He's now 65, and he wanted to get a reverse. So she has a reverse. So basically what we did is called a heck'em to heck'em, right? A reverse to reverse, refinance. So he refinanced and paid off her reverse mortgage and created his. Now we had a stumbling block. Things were working forward until I pulled what's called CAVERS. It's the federal debt system, and he had a student loan that was in default that he didn't even know about, didn't even show up on the credit report. And he's like, wait, all my student loans are erased. They're all done. And I'm like, well, you have one on here. So I gave him the information, where to call. He called, and yep, in fact, he had a default loan that was originally $50,000, and it's been over 15 years. It was now a little above $100,000.
Ouch.
Yeah, so he's like, whoa, we can't move forward because he has a federal debt in default. So I said, get in contact with the servicer, let him know what's going on. As long as you're working to get it out of default, they'll continue to allow you to live in that house and, get on the right track so we can get the reverse done. So he did that. He had to make, I think, I might be wrong, something like 6 months payments. And then once he made those 6 months, they pulled it out of default. Now he's on a payment program. And now he's fine. So we started his reverse in October of 2020, and we just closed it last month. So so it took a year and a half to do, and he just kept in touch with the servicer, and the servicer was okay, just check back in 3 months, see how it's going. And they worked with him, so that's over a year, right?
Yeah.
So the servicers, they don't want to foreclose. That's not their goal is not to foreclose and take that house. They want to work with the borrowers. They want to work with the heirs and do all they can do to help them and give them the time they need. Now, of course, if you're doing nothing but living in a house and fibbing a bit, yeah, then they might call the note due. But as long as they know that you're being proactive, and the servicer also was in touch with me, is he still moving forward? Just had to write yes, acknowledge that we are still proceeding and working on everything. So that worked out great. So that's probably my best, most current example of how well the lenders work with borrowers and heirs to make sure that they're able to keep that house if they want to.
Long and complicated.
Long and complicated, yeah. It's completely reverse thinking. It's nothing like the traditional side. It's a different world.
So go ahead and expound on the differences between working with you. Why would people work with you versus see the commercial from Tom Selleck and call the 800 number? What do you bring to the table that maybe he does not?
Okay, so I'm going to bring more education to the table. Tom Selleck's an awesome guy, but he's not your loan officer, right? When you're dialing that 800 number, you're dialing into a dial-in center, and you're getting someone on the other end whose goal is to turn that into a loan and close it. You may or may not get a lot of education. I tend to take a lot of time with my customers, and I tend to be there more than 9 to 5. And if I need to help out, I can. If you're, I don't know, I'm more personalized with my customers, and I make sure they get all the attention they need to their details. I'm going to take more time. Where your online lenders, their goal is to close that loan.
Gotcha.
So that's probably
what is you use the term servicer, and if you're just joining us, we're talking with Cindy Wilson with People's Mortgage, and we're going into some of the fundamentals of reverse mortgages. So Cindy, when you use the word servicer, like the person or the entity behind my traditional loan is a bank, okay?
Right.
So what's the difference between a traditional bank that you see on every street corner and a servicer for reverse?
So there's not much difference. It's just the lingo. Sometimes I talk too much lender. So your bank has a department that services the loan. So when you have your mortgage statement, and you're calling that customer service line, that's the service department for the lender. So in my world, it's the same thing. When I close a loan, and one of my lenders that I call investors, same thing, they closed a loan, but they have a servicing company like C-Link, I think is the most current one for reverse mortgages. They service the loan for the lender, so they basically take care of the back office.
Gotcha.
And the customer service.
Okay, so now let's. So as I said at the outset, this is part of the show we call Speaking of Sales. So now, thank you for all that product knowledge and information is crazy on reverse mortgages, but you, just like all of us, we are at some level, we're always in the business of selling, right? Mm-hmm. We're always in the business of selling. So put your selling hat on, and has the process of selling changed pre-pandemic, pandemic, post-pandemic, or is there always been a common thread through how you get new clients?
With reverse mortgage, it's probably still the common thread. The difference is the interest rates are higher, although on the FHA, HECM, the interest rates are lower than the traditional. Still, thank goodness, right now. The jumbos are a little bit higher because it's just a proprietary program to that lender. It's their own program. So I think the difficulty right now is my customers who are seniors on a fixed income, struggling to stay in their house, have a mortgage payment, want to get rid of it, but they're making a minimal Social Security, and maybe they have a small pension. So as the interest rates get higher, it's getting a little bit more difficult to pass the financial assessment. Not as difficult as a traditional side, but still there's some difficulties within there. Gotcha. That's it. But otherwise, it's still kind of the same for me.
So you know, we've talked in our sales training, we're always talking about relationships and lead generation and making sure you have got a decent funnel, sales funnel with you know, keeping incoming stuff coming into the funnel at all times. So what are the, you know, and so what we're going to do now is workshop this a little bit using Cindy's situation as to developing her an example or a hypothetical of her networking partnerships and what types of companies they are, what types of individuals they are, because what we're trying to do here is, you know, is to basically understand the importance of networking and the importance of strategic partnerships and how we keep those engaged. When we're talking about engagement, the common concept of engagement so often just is about employee engagement, you know, but on the flip side, there's an awful lot of solopreneurs out there who don't have employees. There's an awful lot of entrepreneurs out there that have minimal employees. There's an awful lot of very small businesses that employees are engaged just because the interaction with the owner is just constant. But in a situation where you're selling a service to multiple individuals, you know, it's very important to identify who your network partners are. In other words, who's in your stakeholder family, who is actually a contributor into your world of getting leads, processing loans, closing loans, and who all is important in that. And so we call that our networking partnership crew. And we've done presentations on this before, but now we're going to do a little bit of a different one because we're not just going to stop at the concept. We're actually going to fill in the blanks. So put your sales hat on, and grab a marker, and tell us exactly, let's go through some of your networking partners that are critical to your business.
Okay, so the top of my head, who I work with most now are financial advisors.
Okay.
Okay. Do you want me to spell it all out?
No, just.
I'll put FA.
Yeah.
Okay, so your financial advisors.
So are those certified planners and things like that?
Yeah.
Okay.
Yes, because they're working with their customers trying to increase their portfolios and their overall value. So they, like I mentioned, in a volatile market now, tapping into home equity would be better than tapping into their portfolios since the stock market's so volatile, going up and down daily, you know, 100 points, 400 points, back up, down. So they're really important to me right now. Working with them and their clients helps make their clients' overall full portfolio encompassing that house stronger.
Gotcha. So do they already have a good knowledge base of reverse, or that's kind of your part of what you have to do?
Yes, there's an old financial advisor myth of don't do that reverse, it's not good. And now financial advisors are beginning to understand the reverse mortgage better and realize, whoa, you know, maybe there's something to this reverse mortgage that can help my clients. And the financial advisors that are open to learning and I can educate them, sit with them for as long as they want, they're the ones that are understanding and being a better financial advisor to their client. I think, just, you know, bias.
One of the things I want to remind everybody is that even though we're trying to outline Cindy's networking partners, we all should be doing this exact same exercise based upon what our own industry is, what our own functionality is. So to all of our viewers and listeners out there, this applies to you from a conceptual state. So if you're taking notes, try to fill in your own blanks as we progress here on the easel pad. So in addition to financial advisors, who else in your world is really, really important?
Actually, realtors are really important to me. Realtors, because this is a niche that realtors are not tapping into because it's an overwhelming product and they're so used to this great fast market. The education's less. They're like, well, I don't need to do that because I can sell 5 houses tomorrow. Well, that market's changing. Now it's getting a lot tougher for a realtor to sell a house and for a buyer to buy a house with interest rates up and inventory down, and it's just a whole different market.
Yeah, I talked to a realtor just yesterday morning. He has 6 buyers and no houses. You know, he's working with 6 people and he can't find houses that are even remotely close to what they want him to show.
Well, so with the reverse, you can purchase a home with a reverse mortgage. So with a reverse, based on your age 62 to 100, determines the usable equity if you already have a house that you can pull out and use. I call it usable equity because it's just based on your age. The older you are, the more usable equity you get to pull. You know, the younger you are, the less, because you're going to live longer. So with a purchase, you're going to come in with that usable equity.
Okay.
Right? So you may have a customer that is downsizing. They're selling a house, and we know there's so much equity in these houses now. Now they've got a chunk of money. They're thinking, I'm just going to put all that chunk of money and buy a house cash or a huge down payment. But now you've put all that money in another house. What are you going to do if you want to paint, remodel, whatever you want to do with that house? Well, why not put a portion of those proceeds into the new house with a reverse purchase and still have some left over to make the new house your own based on whatever you want to do?
Gotcha.
I've had instances where, because I am a traditional lender as well, where their client has chosen 2 homes. They love the 2 homes. This one they want more. But on the traditional mortgage side, they can't qualify for that house. Their debt to income ratios are just off. They can't do it. But if they have the liquid assets to do the reverse purchase, now we're talking about a financial assessment, which is a whole different class, but it's more like VA residual. What's left over? You know, now maybe they can get that first choice house that they couldn't qualify with the traditional, but they can qualify it with the reverse purchase. Now they're in their house, but they're thinking, well, I don't want to lose all my equity. And well, that's fine because you can make mortgage payments. So you treat that reverse mortgage purchase as a traditional, and you make mortgage payments every month like you would a traditional. Then you're doing the same thing. You're paying down the house, right?
Gotcha.
But you're also opening up a line of credit, which what the benefits are. Opening up a line of credit you can draw on future and also has that growth rate, so it's earning money, so it's growing all the time as well. So there's a lot better benefits with purchasing that way as well. That's one.
So who else is in your world that is really key to your process and your selling?
Your boss. Should I write?
Yeah, sure.
Okay. So your boss, people you work with. What's this people work with? You know, we've got a younger generation coming in, right? And we're all getting older. Well, maybe you younger generation or my generation is overhearing somebody talking about refinancing their house or wanting to get a HELOC, and they're 62 or older. Or if their home is worth over $970,000 and they're 55 and older, now we've got the conventional product. Because the conventional product will go from the FHA loan limits of $970,800 above that up to $4 million.
Okay.
So even if you have a multi-million-dollar house, you can work with a reverse mortgage. So you don't have to be this lower end, you can be this big end. So you're going to hear that a lot at work, just overhearing conversations, or maybe you know someone direct.
What about
Friends.
title
Companies, yeah, your title companies. Title, because, you know, people who work for title and escrow, who do they have? They have a whole portfolio full of people purchasing, refinancing, realtors, private money lenders. They've got everybody, and all those people know people, and they chat, and they go to lunch, and they're a great key to me of referrals.
Gotcha. What about a little bit more on the personal side? Because if you're doing that top area properly, then all of a sudden you're going to be making money because you're going to get your commissions,
Yeah.
and you're going to have your own accountant and your own lawyer. And so are those people really, do you have to refer to them on a regular basis?
Do I have to refer to them?
To your own personal stuff?
Oh, well, yeah, if something comes up, yeah.
Well, then they
refer to
should
them.
be part of your network. I mean,
Exactly, yeah,
because
exactly.
you reach out to them for advice.
Yeah, I
So,
do, you know,
CPA.
Yeah, so your CPAs, shoot, your contractors, your roofers, your
Oh, there we
termite
go,
people.
Mitch.
Yeah, they're trying to finish a house, you know, or they're building a house. So, okay, so this is happening to me now. We're building a house, and the cost of the build has, you know,
Not going down.
not going down, you know, with the supply, demand, a lot of that stuff. Well, I'm like, I'm not 62 yet, because what would be best for me? I own another home without a mortgage. I could pull a reverse mortgage line of credit, finish the build, not worry about having to make this, you know,
Payment.
unless I wanted to, but be able to concentrate on finishing the building of my house, because construction loans are very difficult to get. And if you're already in the middle of construction and you don't have a construction loan, you can't get a construction loan. So what are you going to do if you're running out of money? You're going to look on the homes that you own. Well, what about your primary residence? If it's your principal residence and you have enough equity within that house to get a line of credit to finish the build of your new house,
Why not?
why not? So,
Okay.
I know.
So who else is in your industry?
Oh, I
You-
got to put contractors.
Contractors, yeah.
Contractors
And subcontractors.
and subs.
Pardon? Like plumbers.
Like plumbers.
And roofers.
And your roofers, yeah. Everybody is involved with the build of a house or a remodeling of a house or what have you. You also have your family members, right? Your older generation family members. I got a call today of someone who's a little frantic because she has her own bills to do, and her mom is healthy, well, and older and running out of savings, but is sitting on a house with no mortgage. You know, she's like, what can I do? Can I help my mom? It's hard for me to help my mom and also take care of my family. What's this reverse all about, you know? And so I'm letting her know, well, we can probably get her, depending on, you know, her financial assessment, get her a line of credit on her house, and then she can draw on that as she likes, and she doesn't have to worry about making a payment.
Gotcha.
So she can live off her Social Security and her line of credit.
So let me ask you a question on restrictions. Who can restrict you from doing your job? In other words, you've got compliance issues. I've heard you used
yeah.
compliance earlier. So they are stakeholders as well, because sometimes, you know, the things that you want to do or think you can or should do gets the old time out.
Yes, we are heavily regulated, and we're so regulated that we have to cross those T's with a straight line.
Yeah.
or it's a no. So the reverse mortgage is definitely the best protected loan in the marketplace, even though the myth is it's not. It really is, because we can't even move forward with your application until you get counseling. When is that in the traditional world? When do you need counseling in the traditional world? You don't, unless you're a first-time home buyer getting a down payment assistance. That's the only time you're getting, that I can think of, you may know someone else, that you can get, that you have to have counseling. But with a reverse mortgage, whether it's the FHA reverse mortgage or the conventional reverse mortgage, you're going to get counseling first.
So how often do you have to deal with a compliance officer, say, in your company?
Every loan I have.
So it's good to know those people and have a strategic relationship with those people.
It is, because then I can go to them and go, okay, I've got this situation. Am I going to be within regulations or violate a regulation? So they're my protectors. They can be really annoying, but they do protect me, and they keep me safe and legal, as well as keeping my customers safe and legal.
Gotcha.
Yeah.
So let's put a compliance square. And what about, I'm in my own kind of thinking, what about people like home inspectors and
Yeah, I guess I was relating
and
them to them.
appraisers?
Yeah, home inspectors, appraisers maybe, but they don't really talk to customers. Their job is to go in the house, take the pictures, measure, look for safety and healthy, health and safety, and then leave. So, but yeah, your home inspectors, well, that would be after the purchase though.
Okay.
Right?
All right.
So yes, because they may know people, or after the fact say, hey, I remember these people and I heard them over chatting, and they might, the reverse mortgage may work for them, because maybe they purchased with a traditional, but maybe they overheard something that ticked in their mind that, hey, maybe they could turn that traditional mortgage into a reverse after they purchased and moved in. Which you can do.
Gotcha.
Yeah.
Any other
Well, obviously
relationships
we have
come to mind?
family. We're going to have your friends, right?
Yep,
Your
okay.
friends.
Good lead source, friends.
Yep. Maybe your significant other, if you're not married,
Okay.
their family and friends.
So,
Significant other.
sure, SO or whatever.
Well, and there's also, you don't have to be married or single. Maybe you're a brother and a sister and you're co-living in a house.
Okay.
You too can, as long as it's your principal residence for the both of you, brothers and sisters or whatever, we're very LGBT friendly as well, right? So as long as those people who own that house, live in that house, and it's their principal residence, we can do reverse. You don't have to be just single or just married.
Gotcha.
Okay.
So there's all kinds of
There's all kinds.
combinations, iterations that can go on here.
So
in
maybe I should
reverse.
put brothers and sisters and
Sure, whatever.
here we go.
Wherever you generate leads.
Well, I guess that's family though.
Okay.
Right, that's
So
family.
what other lead generations do you, that come into relationships?
Ugh, when you think about it, it's like, oh, where are they?
That's the point of this. We're going to be talking about all of this in a second. I know you got to leave soon here, but this is exactly what I wanted. I wanted the example of it. Everybody needs to do this exercise.
Well, I know actually, retail bankers, your Bank of America, your Wells Fargo, people who work for those banks, your credit union. If you're with a credit union, they don't do reverse mortgages.
Right.
So your deposit counselor, your loan officer within the bank.
So loan officer, yeah.
Yeah, retail banks. So
Okay, retail banks.
Retail bank. So anyone that works in a retail bank that, I'm going to put LO, sorry, I can't write very well. LOs, bank workers. They can't help their customers with a reverse mortgage because they don't do reverse mortgages. So they're a big referral partner for me as well. I have one in town that I refer the younger generation home equity lines of credits. I don't do those, so I refer them to him.
Okay.
He refers me reverse mortgages because he does not do them in his bank.
Sure. Makes
so
sense.
those are good relationships to build.
Gotcha. All right. One more?
One more blank. Well, what do you guys think? One more block.
Do you have like internal marketing people that push leads your way at all, or?
No, not really.
But they develop marketing materials that you can use.
Yeah, I develop marketing materials I use. I do work with some of our bigger branch teams. Since I'm one of few reverse mortgage specialists in our company, they encourage our loan officers and loan assistants and employees to refer their reverse leads to me.
Gotcha.
So,
all right. Well, that's good.
So
I know it's a.
should I put that down?
You sure?
Okay.
Just fill it out. Don always uses a 16 4x4 block. I use a 12. I know other people who use a 9 because they just have their own level of unwieldiness. So anyway, this is an example of workshopping, developing your strategic network, developing and making sure that it's really, kind of concise and you know where you're going for your sales and your leads. So I know you have to take care of some business and get out of here. Thank you so much, Cindy, for being our example setter here.
No, thanks for having me.
And
this is great.
this is a good section of your network partners.
Yeah.
The only thing that we need to now go next step at some point in time when we get together again is we'll identify physical names, and
Yeah.
we'll go through. Remember, it's the referral. It's a tennis match. It's we give one, we get one,
Yeah.
and so it's very important that we're going to be talking about engagement here soon. But it's very important that we stay on top of this. And if one of those boxes ends up not doing their job
Yeah.
by sending referrals, your way, then we got to deal with that.
Yep.
May have to switch that out.
Yeah,
Might
no,
be,
that sounds good.
maybe we find a new set of financial advisors to go after, or we find a different title company to work with, if indeed they're not playing the ball game that we want
Right.
them to play.
Yeah, no, that sounds cool.
Okay.
Yeah, no, this was a lot of fun. This was a good learning experience too.
All right.
This
Sounds
is fun.
good.
Yep.
All right. You are
Free to go.
appreciatively dismissed.
Thank you very much. Have a great weekend, y'all.
Yes, thanks.
Oh, really cool. Yeah, well, I'm happy to chat more. So.
Okay, thanks, Cindy. And okay, so now what we want to do is, now that we've gone ahead and done the exercise of identifying our strategic network or our network partners, or I also like to call them, just stakeholders. They're basically the people that are really, that you're joined at the hip in your businesses with them, because they give you business, you give them business. They help resolve problems. And it's really important that you identify who those people are. And even though that last box should have been sales and business coach, just saying. But regardless, so now we're going to talk about the 6 steps of engagement. And the 6 steps of engagement is a continual process. We're always going to be analyzing this on a very regular basis to make sure those are the partners that we want to be doing business with, that we want fully involved in our businesses. And so the first thing when you're doing that is really kind of like what we did right here. You got to build the right team. You got to, and you do that by not just saying, okay, X title company is here because I know, Jimmy or Sarah over at X title company, and they seem like good people. But at the real end of the day, you have to understand your own genetic drives, and we can provide the tools to do that. But you also want to understand the genetic drives of every one of your teammates, if you will. And so you want to make sure that you guys are always on the same page, that you understand that you have the same, vision, mission, and values, that you are very similar in helping each other as a referral partner or as a strategic partner. So you want to understand the genetic drives of yourself and of others, and then what you want to do is align your team with the drives that you want to go after as defined by your mission, vision, mission, and values. So building the right team is really, really important. And so now that we've started the exercise of doing that and getting that documented, now we can start to think about all the things that we expect from those teammates, because setting clear expectations is really crucial to make sure, because whenever you're in a relationship, accountability is really, really important. And to hold somebody at any level of relationship accountable, there's got to be clear expectations. There's got to be the traditional acronym for SMART goals. They've got to be very specific, they've got to be measurable, they've got to be achievable, they've got to be relevant, and they've got to be time bound. So that's the SMART. So you got to make sure that if you're going to set clear expectations, and it's a two-way street. you will want them to set expectations to you, because you need to be held accountable as well as the author of this particular grid. So anyway, once you understand the genetic drives and team members, then you got to make sure that clear expectations are known throughout. In fact, and it's not unusual or you know, intolerable or unacceptable to document them. You know, and just say, all right, we're going to keep track. You know, you're going to send business my way, I'm going to send business your way, and we're just going to track to make sure that everybody, that we don't lose sight of one another throughout the engagement process. So once you got a team, a list of names, a list of functions, a list of companies that are innately critical to your success, then you've got to make sure you got to organize the team effectively. You got to make sure everybody understands their role, that everybody understands what they can do on your behalf and what they cannot do on your behalf. So we've got to understand well-defined roles and objectives. And what that does is also minimize duplication of strategic execution. You know, I mean, if you're paying your lawyer to do something, you know, and the accountant also is doing it because he or she can, then you've got duplication, you know. So in other words, you've got some confusion in roles, you know, because sometimes, you know, your CPA is also a tax accountant, right? Sometimes your lawyer is also a tax attorney. So, and it makes no sense to be paying them both to work on your taxes unless it's a really complicated mess. So make sure that all your strategic stakeholders understand their role, have single objectives and single definitions, so that you're not getting too unwieldy. It's still controllable. You've got one guy doing your books, another guy doing your tax, or something along those lines. But you do want to minimize duplication of effort, because hey, that gets kind of expensive, to be totally honest. So when I talk about engage the team, everybody that you're dealing with, everybody that you're identified with, as I mentioned earlier, it's really important that they understand your vision, mission, values, and goals. And that's in and of itself a separate exercise that we also do for our clients. We make sure that we understand where they're coming from, what their world looks like to them, where they find all of their soft skills, where do they have their truthfulness and their integrity and their honesty, and what's really important to them in those regards. And one of the ways that you do that is you can also develop one-on-one relationship meetings. And one-on-one relationship meetings is a really important form of engagement. In other words, you've got here 12 boxes, and in this example, we've got 12 different individuals or 12 different companies. And so you have to basically put it on your calendar, and as part of those expectations, some of those expectations should be regular meetings, whether they be whether it's a monthly meeting or a quarterly meeting. That's really up to you and what your comfort zone is. But one-on-one relationship meetings with your stakeholders is really, really an important step to make sure that A, you stay in front of them, because if you want people to watch you or to look out for you, got to give them something to see. And so one-on-one relationship meetings now they can be coffee at Starbucks, they can be it can be a lunch somewhere, it can be before breakfast, before work, it can be after work, it can be on a weekend, doesn't really matter. It could be at the kids' softball game or whatever. Wherever it is, but just you got to stay in front of your people. And if you don't make a real significant, distinctive effort to do it, those people are going to go away. And the old cliche of out of sight, out of mind really it shouldn't really be a cliche. It's very real. If you're not in front of your people all the time, then they will lose track of you, because you didn't give them enough seduction, if you will, for them to stay up with you. And so, understanding where people are coming from, the vision, mission, values, goals, that all leads to strategies and tactics, because that is the model that's the basic business model. All strategies and tactics that you have, that you execute on a daily basis, are all a function of your vision, mission, values, and goals. So it's really important to get to make sure that everybody understands where you're coming from as far as your stakeholders are concerned. Without that, you're going to lose engagement. And the way you do that is, hey, it's relationship building, man. You just gotta do that. You gotta be in meetings. You gotta go. A lot of that stuff gets put on the back burner because life is life and business is business, and things are going crazy, and you can't. There's not enough time anyway. But this is just one of those areas where you have to really, really hold your own self accountable to stay in front of your people. In addition to one-on-one relationship meetings, you also want to pull the voice of your team. So I know that sounds kind of like it should be part of the one-on-one relationship, and in many cases it is, but that stakeholder may have other people that they rely on to help them do the job that you want to do. And so it's really important to communicate with them as well. And there's all kinds of tools now, thanks to technology. You can get engagement surveys done, like doing especially if you have a small team. You can send out a quarterly engagement survey, which we could help you create. As far as, even though you might be in a smaller world, there's still an awful lot going on that you probably don't realize. There's just an awful lot that where people tell you what they think you want to hear, and that can eventually lead, without a whole lot of controls in place, that information that they think you want to hear can really lead you off the rails and down the wrong path. So it might be a good idea to have a regular vehicle to pull the voice of the team, to make sure that everybody's okay, especially if they're starting to drift from your world. And so you may want to understand a little bit more as to why. And so you can customize those engagement surveys for your current situation, because my engagement survey is going to be different than everyone else's in this room and everybody else watching, because the things that I need to understand that are being maintained and are important is going to be different for all of us and for all of our business situations. So you want to make sure that you customize. You just don't want to take a template off the internet, for example, and just start sending it out because you think it's some healthy exercise. You want to make sure it applies to you and your business. And then what that also does, that allows you to help keep a different type of barometer on the four forces of disengagement. Because when people leave on their own for, say we have a stakeholder that drifts away and just doesn't want to be part of our world anymore, that's a disengagement force. Why did that happen? There are four basic forces of disengagement, and that means, there wasn't the right, the mano-a-mano, if you will, the one-on-one, it wasn't the right fit, or one of your stakeholders doesn't like another stakeholder that they have to work with all the time, as another example, or there can be other forces where the stakeholder just doesn't like your vision, your mission, your way of doing business, for example. Or maybe that stakeholder, you've got to give that guy some sort of supervision, and he or she didn't like the supervisor. So, there's a variety of different ways that disengagement can kind of creep into a relationship, and you got to make sure that through polling the voice of the team, that you can always keep a barometer on those forces of disengagement and make sure they don't come to fruition. and um, and then once you do that, it doesn't matter if it's a team that's a large company, a lot of employees, or if it's just a small team or just a solopreneur with their own stakeholders. You've got to once you get a sense of where everybody is sitting, you've got to always provide continuous feedback. You got to create a feedback loop that is just almost automatic, automatic in its regimen, automatic in your thinking, and you got to be able to recognize where something's coming off the rails a little bit. You got a bad feeling, you got to be able to nip it really fast. And if that is a really important stakeholder, you got to be able to really nip that in the bud real fast so that it doesn't grow into an ugly situation. And if it does grow into an ugly situation, guess what? You're going to have to find a new stakeholder with common elements. And so you want to use the engagement surveys to create the results you need to publish or to discuss with people. And again, that's another area for a one-on-one meeting. That's an agenda item on the one-on-one meetings, so that you can always keep that feedback loop coming and make sure that if the clear expectations become unclear for any reason, that you could re-clarify or just agree to disagree. But it's really, really important that to keep the integrity of the stakeholder grid in place, it takes some work, and it takes some personal information, and so one-on-one meetings is a great way to feedback. Or there's nothing wrong with group meetings too. I mean, if you're all in the same kind of business and you run into yourself on a job site, or you run into yourself in a certain person's office, it's not unusual or inappropriate to sit down as a 3-pack or a 4-member team to sit there and all discuss the expectations and what's been working, what's not been working. And then finally, it's really one of those things where you got to celebrate success. You got to bring reward into the focus. If you don't, recognition is just key, and there's no victory too small. I mean, even if it's just even if it's just a very earnest thank you, it's no cost, it's cheap, it's genuine, it's honest, and it'll be recognized as a huge good deed. So you can have just as little as a genuine thank you, or you can take people out to dinner, you can take them out to lunch, you can reward them in a lot of ways. Now, if you're an extrovert, for example, and you like the public persona, then you want to recognize people in public if you can. If you're not an extrovert, if you're more introspective, for example, or you're more time driven, you're more of a driving, then private recognition works as well. We all have our own genetic drives when it comes to how we want to be recognized and how we want to be thanked. Just make sure that you understand that way, and once that way, for each of your individual stakeholders, once that way really takes hold, then you're gonna make the whole relationship extend for a long time to come when you just make sure you recognize every victory, regardless of how small, and acknowledge that it's a job well done, or if it's a 6-pack on the job site after work, whatever your world is, just make sure that we celebrate success. So anyway, so in summary, this is going to be a short deal today. So what I wanted to do was create a specific action item workshop, if you will, by using Cindy Wilson's reverse mortgage function as a way to establish the strategic relationships or the stakeholder grid, or however you want to call it, our networking partners. And you've got to basically make sure that you understand, you document that, understand that you got to set clear expectations with everybody. If those clear expectations are not met, you got to feel free to move people around a little bit, move people out of the partnership, and get new ones in. It takes a lot of work. It takes a lot of effort. It's a lot of feedback. It's a lot of polling. It's a lot of basic celebration, because celebrations are key to keeping the whole system robust. And so that's really what I wanted to get done. Everybody has their own grid, if you want, and I recommend everybody sit down and go through it and thinking about, as you can see, it doesn't take a long time to do. We just did it here in less than an hour. But then once you identify that all the members of the body of work, if you will, then you got to go through these things to keep everybody engaged, to keep the entire team of stakeholders focused on your vision, mission, values, and goals. And once you do that, you're going to find that your lead generation is going to increase. Your ability to make decisions is going to be quicker and faster, and the decisions are going to be made in a higher quality method for sure, and they're going to be better decisions. So anyway, that is really an extension of the Speaking of Sales show for today here at Don Zavis Sales Consulting. And so as we always try to do every now and then, we want to go through some learning verification and see what everybody. Raul, what did you think about today's presentation?
Oh, I actually put some notes here, but then I don't know where I said them. Right. All right. Well, anyways, I guess identify a potential business partner network. That's something that I've been very bad at.
Mm-hmm.
And I was actually thinking about it on the way over here because my business has taken a downturn dramatically. I don't know if the market's getting harder or what, but I need to identify that potential business partner network and really solidify relationships, because at this point I feel like it's going to be a great need for me.
Right.
So I don't have anything on the rest. I haven't really built a network of referrals. Usually when I get referrals, they're either existing clients or people that I
Right.
keep networking, but I'm not really creating.
More random.
Right. It's more based on my personality. Oh, I remember Raul, he does websites, and 1 out of 10 people will actually do that. So I need to be proactive about it.
Yeah, that's a good takeaway.
Really helpful.
Good takeaway. Mitch, what about you?
Well, I filled out my chart.
Oh, did you?
Yeah.
All right, well, that's a good start.
I got some good ones in there, like sports I play, networking with people.
Oh, yeah.
I play with,
That's a great resource.
Definitely. I put engineers in their own category. I put doctors in their own category, police officers and firemen in their own category, because that's great business for me.
Sure.
It's been proven in the past.
Insurance folks?
Yeah, of course, insurance and the adjusters specifically. That's a real good one. There's lots of private adjusters out there that I've built relationships with and gotten fantastic leads with.
Right.
And then, hey, how about Don Zavis networking group?
You got it.
Down there in the sands.
You got it. That's a great resource.
Yeah, for sure.
And so Raul, just as a passing thought, I know we were talking. You're a very faith-based person, so don't forget those faith-based organizations as sources for leads.
But I've been doing a lot to try to create these networks. I've been offering free work.
Yeah.
And I'm hoping that will reciprocate. And I think already one of them turned out. So I created this website for a business organization. It's not really organized. It's more like a networking group.
Gotcha.
It's informal.
Mm-hmm.
I created a business directory for that. And then she calls herself vice president. It's not really president or vice president. They're not really organized there. But she's a real estate agent.
Oh yeah, good.
And I go way back, and she decided to move forward with a website, but I had to lower my prices so far below
Yeah.
what I like to keep it. So I'm going through that market shift, I guess, and not sustainable, you know.
All right. Good takeaway though, still the same.
Yeah, yeah, yeah.
See, do they have, do your churches have bulletins or things like that? Like weekly publications that you can maybe throw a little tag in if you,
I guess so, I don't know, I haven't really paid attention to that.
yeah, I mean,
Usually all these churches do
I grew
like-
up in the Catholic Church, and every Sunday was a new bulletin, and they would have, you know, the local barber would have an ad in there, and those are usually really, really cheap, but it can tell all the people of your, because almost everybody that goes to a service will read that bulletin.
Yeah.
They'll just pick it up, you know, if it exists, and so it's just another little tactic, you know. What about our house plumber?
Well, your house plumber learned more about reverse mortgage than I ever heard before. And I was really impressed, you know, I'm a veteran.
Yeah,
I've never needed a bank to buy a home. I paid off 4,
gotcha.
and I'm looking for my 5th. No down payment, no worries,
Yeah,
all the insurance, everything's paid for.
nice.
And I qualify it very high. But I was listening to her, and my mind is saying, I was thinking like you were thinking on that last block. Okay, I taught a class with 5,000 fire chiefs across the nation for hazardous contingencies on chemical exposures
Oh, wow.
at Stanford University. I'm a retired teacher along with a retired plumber. I got a bachelor's in science. And what came up, some of my expertise, I got to share with somebody he turned me on to. So we're networking in a real faith-based.
Yeah,
faith-
cool.
It's so faith-based that I'm like, I know I have some responsibility and accountability, but I'm not responsible for the result. I have something else working in my life that makes that possible consistently. Never fails.
I can't even comment on how good a takeaway that is.
But, I mean, just today, we went to a little job. We got it finished. The homeowner had seen one of his drills that we were looking for, okay?
Mm-hmm.
Now, it must have fallen off the tailgate, we don't know. Anyway, she picked up the drill just as the guy that comes around and checks all the garbage cans and steals stuff was coming around the corner. And so we got his drill back.
All right.
You know, and these are the kind of things we can't control. You know, everybody makes mistakes.
Sure.
You know, that's how we learn, by the way. I've learned more from my mistakes in life than most of my successes.
That's exactly what,
And, shoot, I retired going on, actually, as of the 26th of May, 19 years.
all right, that's cool.
And this is, since the pandemic, this is the first time I've had consistent work that I've been loving.
All right, sounds good.
Yeah.
Sounds good.
But I really enjoy you and Dawn. It's kind of cool.
Well, great. You're welcome anytime, anytime. Friday at 11:30.
Yeah.
We're here.
We tried.
All right, well, thanks. Those are all great takeaways. We're going to call it an early weekend here at 12:41. And so we just want to make sure everybody out there has a great weekend. And thank you for joining us. Thank you for all of the help and support you've given us, all of our clients that help us put food on our tables. We are significantly thankful for it. And so good luck, have a great weekend, and good selling from Don Zavis Sales Consultancy. I'm John Wechter.